It's Monday, the 7th of November, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Adam Lang.
Good morning, Michael.
Adam, 5 stories in 5 minutes. Let's jump into it. Story number 1. How would you like to work at Twitter now that Elon Musk is in charge? I tell you what, it's a vastly different company today than it was the end of last week. Half the staff have been let go, a brutal round of layoffs. Musk sent everyone home and locked the office doors before basically telling half of the 7,500 employees they no longer had a job. The ones that kept their jobs were told the company would reopen its offices today.
Musk says Twitter's revenue has suffered a massive drop, blaming activists putting pressure on advertisers. Big advertisers like General Mills and Pfizer have temporarily paused their ads, apparently because they're a bit worried Musk's free speech approach might lift the amount of objectionable content on Twitter. Musk says Twitter is losing US $4 million a day, and in response, Twitter is taking the time-honoured media route and launching a subscription service to make up for lost advertising revenue. It's $8 a month, and that includes the blue check mark that verified accounts get.
We will see how that all plays out. It is a story unfolding in real time at the moment. Story number 2, Adam. Australia is bidding to host a United Nations Climate Summit in 2026. It's not the Olympics, but Climate Minister Chris Bowen says he wants to host the COP31 summit in 2026 in partnership with Pacific nations. COP stands for Conference of the Parties. It's a United Nations conference on climate change held every year. You might remember the high profile, I'd say, COP26 in Glasgow that was held this time last year had Scott Morrison under just a little bit of pressure.
And what a difference 12 months makes. So this COP meeting is the main forum for governments to agree policies to limit and mitigate climate change. But for Australia, hosting COP31 is mainly a signal that the new government wants to get back in the game on climate policy and be seen as a renewable energy exporter by trading partners.
Yeah, it's very political move, that one. On to story number 3 now. How about this, Adam? Nearly 10% of Qantas shareholders voted against a $4 million incentive payment for CEO Alan Joyce at the carrier's AGM on Friday. It's a decent protest vote, nearly 10%. But it isn't enough to prevent it going ahead. Chair of Qantas, Richard Goyder, said executive pay was a challenging topic and said the concerns were reasonable, but it is a competitive market in aviation and you have to pay the CEO well, he said.
Overall, Qantas said it had improved performance further in October with more on-time flights and fewer cancellations in the month. Cancellations dropped to 2.2% in October and are now below pre-COVID levels, while on-time performance for the month improved to 74% from 69% in September. Mr. Goyder was also highly critical of the federal government's proposed overhaul of industrial relations laws, saying multi-employer bargaining could hurt productivity.
All right, on to story number 4. And a new king, Adam, has been crowned in the monthly car sales figures with the Ford Ranger Ute displacing the Toyota Hilux as the number 1 selling vehicle in Australia in October. And the Tesla Model Y, which came in at number 3 in September, dropped to 17th. Last month. That's because of an uneven supply of vehicles. A strong month, though, with overall sales up 17% compared to a year ago, notwithstanding higher interest rates and fuel prices.
Michael, 87,299 vehicles were sold in the month. The MG ZS came in at number 5, the best of the electric vehicles, though only some of those vehicles are fully electric. The figures also show the rise of EVs is still gaining pace. Electric vehicles were 10.8% of all sales in October, but putting that into perspective, EVs are not making a dent in our love of SUVs and utes, which were 80% of all car sales for the month.
Wow, that is huge. Okay, story number 5, last one, Adam. Warren Buffett, the man affectionately known as the world's greatest investor, has lost a bit of money. Warren Buffett's Berkshire Hathaway posted a loss in the third quarter because of the volatile stock markets and also some insurance losses. Berkshire's stock market investments have to be accounted for in its results, and that's really what caused a net loss of nearly $2.7 billion for the quarter, compared with last year's $10 billion profit.
Michael, don't feel too bad. On Buffett's preferred measure of operating earnings, which ignores those temporary movements in share prices, earnings rose to $7.76 billion from $6.47 billion last year. Berkshire owns a whole range of businesses from insurance to freight trains, retailers and home builders. That means its operating earnings are a really good marker of what the American economy looks like as a whole.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Adam.
Thank you, Michael.
It's Monday, the 7th of November, 2022. Remember to hit follow on the podcast, and if 5 minutes isn't enough for you, you can find our longer daily show called Fear and Greed wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.